For joining us today.
Great, I thank you for having me. So I'm just gonna jump right in and let's get going. We are gonna talk all about how to prioritize profit, and really in order to do that, you need to have financial clarity in your business. So thank you for that awesome intro. Like I said, my name is Cheryl. I have over 10 years experience doing this. I own a done for you service, and I also coach entrepreneurs on how to prioritize profit through financial clarity. So thanks for having me today. I'm really excited to be here. This is like my wheelhouse, my favorite thing to do. So I'm so obsessed with you to prioritize profit, because when you bring home more money, not only does that improve your personal life, it improves your family's life, and then it's going to result in your community being improved. And that's how we slowly change the world. And it really all starts by prioritizing profit in our business. We are in a day and age where there are so many entrepreneurs and so many business owners who are living in what we call entrepreneur poverty, meaning you're taking the money out of your piggy bank to fund this business. And I really want to flip that script, and that is my personal mission. So let's jump into how we actually do this. So financial clarity is comprised of three things. It requires accurate bookkeeping, and I know people hate that word, but it's not as complicated as it sounds, I promise. And it also takes your accurate bookkeeping, and then you add that purposeful budgeting, and then you add in that strategic cash management system. And we're going to dive into what all this means. Like I said, it's all simple lingo as we continue. So when you are confident in these three areas, that's truly when the magic happens in your business, and you can turn that business vision you have. We all have these huge visions and goals for our business. But when you have financial clarity, you take that vision and it slowly becomes your reality. Why? Because one, you're consistently earning a consistent and predictable paycheck when you implement these systems. You're saving for profit, your spending becomes strategic and purposeful, and you're confident and you have a plan for your business direction. So let's talk about what each of these stages look like and how we can set up our finances for success. This is Penelope, and she has to be a part of everything. She's so needy. Okay, so it all starts with bookkeeping. And I know this is the part people hate, but if you want to know how to get to turn that vision into reality, you have to know where you're coming from. And that's what bookkeeping is. Bookkeeping provides a snapshot of what you've done historically, right? It's all what you've done in the past. And it is not an optional task. Most of us only do it because it's required by the feds, right? If you own a business, you have to file taxes. In order to file taxes, you need your bookkeeping records. But if you're only using your bookkeeping for a tax time activity, you're missing out on so much data that will really help propel your business forward. So let's talk about a few ways to make it simple and a little bit easier so we can turn that vision into reality. One, you have to use that accounting software. I am a huge advocate for QuickBooks Online. There are several other robust platforms that you can use, but let me tell you why I recommend QuickBooks Online. QuickBooks Online has the most users of any software, accounting software. Therefore, if you need help, you typically can find it for free. If you have questions, the internet is full of answers, and you usually don't have to pay for it because most people are familiar with the platform. Now, we do have some businesses that when you're first starting, paying for that monthly subscription just doesn't make sense. So it doesn't mean you get to skip your bookkeeping or use Excel. There is another free option, which is called Wave, and it's a great free option. But once your business is really making in revenue, bringing in consistent money, I recommend that you move off that free system into a platform such as QuickBooks Online. And I do want to caveat by saying there is a QuickBooks self-employed version that is complete garbage. Don't waste your money. I know it's only a few dollars a month, but it's not really set up for a business owner who has a legitimate business. And any bookkeeper will tell you that. I'm not saying you need the fanciest of QuickBooks options. Typically, you can get away with one of the cheaper versions, but that self-employed is really just a waste of money. I'd rather see you use Wave. Okay, and next, when we're talking about bookkeeping, let's create those financial habits for success, meaning do your bookkeeping every single day. This is where I'm like, Cheryl, I hate bookkeeping. I don't want to do it every day. But listen to me, if you spend the first 5 minutes every single day before you open up your email, before you get started on those business activities, one, you'll get it done faster than if you wait till month's end. Two, you'll have data in real time. And three, you're creating a habit, and it will not take the majority of business owners more than 5 minutes if you spend 5 minutes each day doing it. So we also need to reconcile monthly. Yes, that's a requirement. What is a reconciliation? So real quickly, what that is doing is that's comparing your accounting system, so your QuickBooks or whatever you're using, to the bank records or to what actually occurred. It's making sure you've captured all your expenses. You don't want to miss out on any expenses because those are typically tax write-offs and reduce that tax liability. So reconcile your accounts monthly. If you're not doing it monthly and you're grouping it into 3, 4, 5 months at a time, one, your data typically isn't up to date, current, and you can't use it for these forward-facing activities that we're going to talk about in a minute. But also it's going to take you much longer to reconcile because you have to find the problems rather than be in them, right? Have them more fresh. And then lastly, I want you to use those reports frequently. Like I said, if you are just using bookkeeping as a tax time activity, you are missing so much data that will help propel your business forward. So what do I mean by that? Oftentimes we use the profit and loss statement, which details all your expenses. And then it'll show you, is that advertising effort you're paying for? Is that really turning into revenue for you? Is it worthwhile? There's my dog snoring. You're very rude. But let's be honest, there are some people who are just not willing to do it. And if you are one of the people who are not willing to spend the time completing your bookkeeping, you have to outsource it. But it's not an outsource it and forget it type position. You need to use the data that your bookkeeping provides. So ensure you are outsourcing with someone who is consistently updating your records and is not doing it batches month at a time, because then you're losing all that data. All right. I swear almost everyone can handle their bookkeeping, and there's very few businesses where I say you should just outsource it from the beginning, but it does involve you getting involved. That is essential. Mm-hmm. Okay, let's talk about part 2 of financial clarity, which is your spending plan. This is really where the magic happens. This is where you turn that vision for your business into reality using numbers. This is what a lot of business owners immediately don't think of doing, but is what will change your business completely around. Why? So a spending plan is going to outline your priorities. It's going to show you how and where to spend your money. Meaning, should you put more money into advertising? Is your goal to increase clients? Or should you put some more money into your systems because they're just not working, right? Your spending plan will outline your priorities. Now, whether you call it a spending plan or a budget, I don't care. It doesn't matter. Let's talk about some tips and tricks to create a spending plan that will work for your business. First of all, you need to estimate your revenue for the next 12 months. This is where I get some slack. Cheryl, I don't know what my revenue is going to be next month. How do I know what it's going to be in 12 months from now? Well, you can utilize your bookkeeping historical results to help project the next 12 months. Also remember that this is not a static document, so what you put down today does not have to stay there forever. You change it as you go. But if you don't have the back end historical knowledge to project going forward, I suggest anywhere between 40 to 60% of your capacity if you are in a business where you can only service so many clients a day, a week, a year. I don't want your budget to reflect your goal income, right? Oftentimes we're like, we're going to make multi-six figures this year, so that's what we put in our spending plan. No, the spending plan really needs to have your realistic revenue. And the reason for that is we're creating budgets and spending plans off of it, and it's easier to not have to cut down if we're not meeting these super high goals. So why we should all have these huge goals, I don't want that to be reflected in your spending plan. Your spending plan should be a realistic estimate. Okay, the next step, and I will show you an example of a spending plan in a minute that I use, is you're going to put that top line, your estimated revenue for the next 12 months. And then you're going to reduce it by that cost of goods sold. So if you are in a business where you have merchandise, or if you are in a business where you have a high cost of goods, meaning what does it take to actually make that revenue, you're going to reduce that to come to your real revenue. So once again, that real revenue is revenue minus cost of goods sold equals real revenue. If you are in a business like mine where I don't really have cost of goods sold, typically your real revenue and your revenue are the same figures. So probably similar to real estate, there's not a huge cost of goods sold or cost of services sold. So you take that real revenue and you're going to reduce it by your paycheck. Yep, we're going to pay yourself first. You're going to set aside tax savings and profit savings. This is mixing up that traditional accounting formula, and we're going to touch on this in a couple of slides. But I want you to prioritize paying yourself before you pay all your other vendors, because you are in business to collect a paycheck. And oftentimes entrepreneurs, the first thing they sacrifice is their own pay. Okay, so I do not want to do this. All right, the remaining expense allocation is what you have to cover your fixed and variable expenses. And I will show you this in the next slide. So the goal is not to spend all that leftover revenue. And like I said, we're going to budget off real numbers, not goal numbers. We're going to take those best estimates and they can be derived from your P&L, which all relates back to that bookkeeping. So let me show you an example of a screenshot of the budget I use with my clients. This may be a little hard to see, but this top line up here is where we put in that estimated revenue. These next set of pink blocks is where I'll put in the cost of goods sold if they have any. So your revenue minus these cost of goods sold is going to give you that real revenue. Remember, we budget off of real revenue. We are going to reduce that real revenue by your paycheck, because I believe you should get paid before you pay other vendors. Then you're going to reduce it by profit, because you are in business to make a profit. And if your business is not profitable, is it really sustainable? And then we also need to set aside money for taxes, because let's be real, we have to pay that tax bill every year, whether we want to or not. So that is going to come down to here where we get what we have left over for available revenue. That available revenue is then derived into your fixed and your variable costs. The goal is not to spend all that real revenue each month. So this spending plan is where you will put in your goals if you want to hire some help, if you want to increase your IT budget or advertising, you're going to factor that into here. But when you map it out, that's when you see what's available and not available. And the key here is, once again, you pay yourself first, right? Because you're in business so you can improve your own piggy bank, not everybody else's. I want you to think about all those big companies that are out there. Their spending plan is strategic and it's planned. Why would you run your company any differently? If you're thinking of the Amazons or the Walmarts or the whatnots or the restaurants, all their spending, even if you go down to a YMCA, it's strategic and it's planned. So if you're running a business, why isn't your spending strategic and planned? That's where this budget or the spending plan is essential, right? Don't run your company any differently. So then the key is, what percentage of your revenue should equal your pay, right? What percentage should I be paying myself? What percentage should I be setting aside for tax savings and profit savings? Okay, so this chart is a profit first chart. It is not my chart. And this is what a financial savvy business should do. So if your real revenue is around $250,000 a year, about 50% should be your target as coming back to you in a paycheck. If you're not currently taking in 50% of your real revenue, you should really work on that spending plan and making some adjustments so you can get there, okay? And then, like I said, 15% will be saved for taxes, which would leave you approximately 30% for your operating expenses. So if your business is making $250K in real revenue, remember that's not cost of goods sold, 30% of that should be allocated towards expenses. So let's talk about cash management. So simply, cash management is just how you use the cash in your business. It's literally the simplest method I know how to ensure that your business is profitable is implementing this profit first system. So what is profit first? Profit first is a cash management system, right? written by Mike Michalowicz. It's a book. You can get it off Amazon. It's a really good book. I recommend it. But we're going to give you the high level summaries here today. So basically, it's an envelope system for your business. So maybe you've heard how some people put cash in different envelopes and that's how they operate their personal budget. It's very similar. And what this system does is it capitalizes on your natural habits. So let's think about it. If you want to know how much money you have available to buy that next copier, let's say, for example, what do? You're not going to go into QuickBooks or pull up an Excel to see if you have the right amount of money allocated. You probably open up your bank balance and see how much money is in there, right? To see how much money we can spend. So this system just capitalizes on that. So let's talk about how it works. So using multiple bank accounts, we're going to flip that traditional accounting script. So that traditional accounting script is revenue minus expenses equals profit. But if you follow that traditional accounting script, you're always getting what's left over in your business if there is anything left over. And in that traditional accounting formula, you're probably operating out of one big pie, right? So you're not segregating and paying yourself accordingly, or even to those goal percentages I just showed you. So we flip that script by saying revenue minus profit equals expenses. That's why in that spending plan, we reduce our revenue by our owner's pay before we allocate money towards expenses. So how do we do it? 2 times a month or more frequently if needed, we are going to move money from a revenue account to each of these smaller plates or smaller bank accounts. And I'll show you a visual on the next slide. And we're going to continue these habits that set us up for success, meaning we're still going to check our bank account like we do to see if we have enough money. So let me take a minute to describe the system. So the system does require multiple bank accounts. And this is where people say, I don't want to have multiple bank accounts, Cheryl, what a pain in the rear end, or I don't want to pay for them. Well, that's true. I don't want you to pay for them either. And in fact, none of my clients pay for their business accounts. Sometimes you can negotiate with the bank so you have 0 fees, or sometimes you have to change banks. But what you're going to do is you have all of your revenue gets dropped into one bank account, this top bank account. And then either twice a month or weekly, whatever your specific business needs, you are going to take the money from the revenue account and you're going to divide it into smaller plates. So a percentage of your revenue in this account will go to owner's pay, a percentage will go to profit, a percentage will go to tax savings, and a percentage will go to operating expenses. So if we take a look at that chart that we had on the first page, 50% of your whatever's in that revenue account will go to your owner's pay, 5% will go to your profit savings. We'll set aside 15% to pay Uncle Sam, and 30% will be used for operating expenses. Now, those are just targets. You're not going to start there on day one. It's really important that you know where you're at and what you can afford, and how you do that is by going through your bookkeeping. And if you need help determining your specific allocations, reach out and we can get that. But the key is to segregate. Stop operating out of one account, because when you operate out of one account, you cannot easily tell what you have set aside to pay yourself. You don't easily know how much you have for savings. And what you typically do, if you're operating out of one, even maybe 2 bank accounts, you're robbing Peter to pay Paul, right? I'm borrowing from my tax savings to pay for my additional expenses this month. When you segregate it, you don't do that anymore. Okay. So how do we implement it? Like I said, we set up those 5 bank accounts at minimum. I have some clients with up to 8 bank accounts. It really depends on your specific business, if you run payroll, if you have sales tax, etc. And then you're going to determine what allocations of your revenue should go to your owner's pay. So I shared with you some of the targets, but that doesn't mean you start there on day one, right? Because we want to continue our business for success, and that's how we do it. In addition, then you'll determine what percentage of that revenue goes to expenses. So if I was to tell you my personal business, of all the revenue that comes in each time I get paid, 42% of that goes to pay me, 5% of that goes to profit. I set aside 30% for operating expenses, and the remaining, which I believe is 22%, if you check my math, goes to tax savings. So that's my personal business percentages. Then I want you to update your deposits to make sure your deposits are going into that revenue account, update your expenses so they're drawing on that correct bank account. And then you evaluate these allocations frequently. So let's talk about what you use that profit account for real quick. Let me bounce back and I will show you. This profit account, so this owner's pay, rewind a second. This owner's pay is your paycheck. Similar as if you were to work at a 9 to 5, you collect a paycheck there. Your business should be paying you consistently and predictably. Utilizing this profit first cash management system, it ensures that you are consistently and predictably collecting a paycheck. How is it doing that? It's because it works off a percentage. I always know that 42% of my revenue is my paycheck, and that's what I can live off of, right? The profit is just that. It's a bonus to you. So whatever is in this profit account quarterly, you take 50% of it out. Yep. So 50% of that comes back to you in the form of a bonus, just as if you were to invest in a big company, you would get a dividend or bonuses. That's what this profit account is for. Your tax savings is to pay your personal tax liability for owning a business, what you owe in taxes. And then that operating expense account is pretty self-explanatory. It is used to pay for the expenses in your business. I am such an advocate for this profit first system because literally it is the easiest way to ensure you're collecting that consistent and predictable paycheck and that your business is sustainable because you're not overspending, right? I talk to a lot of businesses where they're overspending and they find that they're, using their personal funds to help run the business, and that's just not sustainable long-term and creates a lot of burnout and regret and frustration. So I don't want that to be you. So if we have any questions or anything you want to talk about, feel free to let me know, or you can find me on social and I would be glad to provide additional information. And I do have a Facebook group where we talk all about this and how to implement it further. But financial clarity, just in summary, is truly those 3 key components. It's your accurate bookkeeping, which is essential. You have to know where you're coming from to know where you're going, followed by that strategic cash management system. Pay yourself before you put funds towards your operating expenses, map them out so you can turn that vision into reality. And lastly, how are you going to manage your funds? I highly recommend that profit first system. So you're managing your cash and ensuring you're receiving that consistent and predictable paycheck and your business can run sustainably. So thanks for having me. And if there's certainly any questions I can answer today or later, just let me know.
Awesome. Thanks, Cheryl.
My pleasure. Thanks for having me.
Super helpful. This is something a goal of mine is to get my bookkeeping together.
Yes, that is stage 1 for sure. You have to have those bookkeeping together.
Yes. Thank you.
I like the fact that this is definitely a different way of thinking about it. That's a whole different concept than I've ever heard. I actually pulled up trying to find this profit first book just to get a read of it myself, but that sounds like that's definitely something different than I'm used to.
Yeah, I have, I'll send it over to April for you. I have like a Cliff Notes version that I wrote of it. I am a profit first professional. I am obsessed with it just because it easily changes clients' lives. Mm-hmm. It's just like stop paying everyone else and take care of yourself.
Very interesting. Thank you.
It works. My pleasure. Thanks for having me.
Gosh, thanks, Cheryl. I appreciate your time today.
Yeah, thanks for having me. I do appreciate it.
Sure. And then I'll share this recording with you and we'll post it to our YouTube channel.
Perfect.
Awesome. And thanks for doing everything on social. I think it's great.
Good. I'm glad to have you a part of the community, and I welcome anyone who wants to join. We have a good group going.
Yeah, no, it's nice to bring, accounting and bookkeeping to the common man who it hurts my brain to think about it sometimes.
It doesn't need to. 5 minutes a day.
Yes, I know. In the morning.
Yes. All right. You all have a great day. Thanks for having me.
Sure.
Thank you,
Cheryl. Have a good day.
Good job, April.